what's going on, everybody? Hey, welcome back to another training video lesson. In this video lesson, I'm going to talk about the 7 important beliefs that you must accept to improve your trading performance. Hey, listen, we all would like to improve our trading performance, and this video might be the key on how you do it, all right? All right, everybody, so on the screen here, the 7 important beliefs that we must accept in order to improve trading performance. Now, in this video, I'm going to be sharing with you some slides. I like that. I get a lot of emails from people telling me that they really appreciate the slides. I didn't used to do that, but since I'm continually getting emails about the slides, I feel that I'll continue to do it. So thanks so much, and keep supporting. And again, hit that little bell to be notified whenever I shoot a video. All right, 7 important beliefs. So let's move into it here. All right, so important. In order to be a successful trader, it's not just about finding a strategy, practicing that strategy, and then making lots of money. Okay, so this is very important. Now, when you're new to trading, and again, I know because I talk to brand new traders every day, you know, a lot of them, and I hate to say, think they're going to be rich in like a month, maybe a couple months. It doesn't work like that. I mean, for some people it might, but the majority of people, it doesn't. If you are to be successful, it's not about just one specific strategy. Because now, after they realize, okay, you know, I'm not a millionaire by Friday, then they start to learn strategy after strategy. And then they get into one strategy. They think that's the holy grail. And they're like, okay, this is it. This is it. Well, I'm here to tell you that it's not just about finding a strategy. It's not just about practicing that strategy. There's so much more to it, okay? But again, I bring up this point because a lot of traders, they tell me that if I can just find the right strategy, I'm home free. There's more to it than that. And hopefully in this video lesson, we start to dive in some of these principles. Okay, so here's a fact. Traders develop certain traits and beliefs, which in turn allow them to implement a strategy effectively in all market conditions. Okay, so this is a fact. Traders will develop certain traits and beliefs depending on their skill levels and depending on, I guess, how many books they're reading, you know, whoever their mentors are, but they're going to develop certain traits and beliefs, and these beliefs that you develop, this is what's going to allow you to implement a strategy effectively over various market conditions. Because as you know, or at least you should know, not all strategies are created equal. The markets are dynamic. They're constantly changing. And so one of the things that I tell students is, just because you have a strategy today that is successful doesn't mean that strategy is going to be effective in the next month or 2 months or year, because markets change. But these beliefs that I'm going to be sharing with you today, these beliefs don't change. It goes beyond just the strategy. Remember, get the head right. The psychology part of trading, although that's overlooked a lot because it's not sexy, right? I mean, it's not, you know, making us money, even though it is making us money. It's just a lot of traders don't believe it. But it's the traits and beliefs that you develop, okay? Those, in turn, with implementing a strategy and understanding market conditions, is going to be your key. So trading does take focus and discipline, but it doesn't have to be stressful. For a lot of new traders, it's really stressful. You know, you get into a trade, you know, I always tell my students that we're always experiencing one of 2 P's. P for pain or P for pleasure. So stress is part of the pain, right? When we enter a trade, it goes against us. We feel stressful. But trading, it takes a lot of focus. It takes a lot of discipline, but it doesn't have to be stressful. If you fail to implement these beliefs that I'm going to share with you in your trading, you are going to continue to have stress and struggle. So a lot of traders feel this stress and struggles because they're not implementing these 7 beliefs that we're going to be talking about here today. So if you fail to implement these beliefs, you will continue to have stress, and that stress will cause you to struggle. Okay? Stress, at least in trading, is created by an internal conflict between what you want to happen and what actually happens. So, again, this is, a lot of this stuff I know you guys know, but stress in trading is because when we enter a trade, right, we feel pleasure. It's what we want the trade to go in our favor. Maybe we're in a squeeze, we get inside the squeeze, we want that trade to fire in our direction, and so the stress is caused by that conflict of when it doesn't happen, right? We get in a squeeze, maybe it goes in our direction and then it reverses on us, right? That ultimate and dreaded fake out. That can cause a lot of stress. So, but it's this internal conflict in these beliefs lots of times that are causing that stress, causing you to act, against your rules, which ultimately is causing you to experience more pain and eventually getting stopped out for a loss. So, we can't change what actually happens in the market, but we can change what we want to expect, what we want or expect from the market. So, again, you guys know this. The markets are dynamic. They're going to move with or without us. We're not the institutions. We're not the ones controlling the charts, right? We're just retail traders. We can't control what happens, right? Nobody has a crystal ball. But what we can change is what we expect from the market. It's very important, and I'll talk about it here in a little bit. It's what we expect from the market, not what actually happens or what we want to happen. There's a big difference, okay? This is where the 7 beliefs occur. You must accept these 7 beliefs that we're going to talk about right now to improve your trading. So let's go ahead and dive into the 7 beliefs. So here are our top 7 beliefs that you must accept to improve your trading performance. Belief number 1, the belief that anything can happen. Again, a lot of this may sound obvious on the surface, but stay with me. Because when we enter a trade, don't get me wrong, we assume it's going to work, right? That's why we're entering the trade. We're not entering the trade because we want to lose. We're entering the trade because we want to win. But the belief number 1 is we've got to accept that anything can happen. Okay, we don't control the markets, like I said a minute ago. When we get into a trade, it's either going to work or it's not going to work, right? If I enter a squeeze trade because it's, while it's building up momentum or building up pressure, volatility is decreasing, and I want that squeeze to fire to the upside, I've got to be willing to accept that anything can happen and it can go against me. Again, it sounds obvious on the surface, but here's a question that you need to ask yourself. How many times have you been in a trade and it went against you, and you should have stopped yourself out, but you didn't? And the reason why you didn't is you didn't accept that you were wrong. You didn't accept that you were wrong. But if you again, let's say accept, if you accept this belief of anything can happen, then you're either right or wrong. You are paying the market for the market to show you if you're right or wrong. But I'm prepared either way. So you must accept, especially for you new traders, anything can happen. We either win or we lose. All we can control is when we're in a trade, what we do after the market shows us its hand. Because that's really all we're doing, right? We're trying to think like an institution. We're trying to take advantage of somebody else. If we buy, somebody else is selling, right? So somebody's going to be wrong. Anything can happen. But again, it sounds so obvious on the surface. But ask yourself, are you really abiding by this belief of anything can happen? Because it can. All right, so number 2, you don't need to predict to make money. Now, this one on the surface might kind of get you. So let's talk about this. So we don't need to predict exactly what the market is going to do to make money. Now, let's go back to what I said earlier about the market's dynamic, it's changing, and our job is to align a strategy to match market condition. So for example, one of the strategies that I really like is credit spreads. I love it because we don't need to predict to make money, right? It's a probable, again, everybody trades it differently, but let's say you're trading it from a probability standpoint. Hey, listen, I don't need to predict. I just need it to maybe stay in a range, right? Or stay above the strike that I sold. But I believe a lot of beginning traders struggle with this. They're always trying to predict the future, right? Predict the future, but you don't need to. Trading is about probabilities, right? Expectancies. And if you're new, you may not understand that, but you should. Okay, you should and you need to. It's not about what happens over any one trade. That's not what matters. What matters is what happens over a series of trades. So when I say you don't need to predict to make money, it's you're going to have losers. But if you have a strategy that is proven to be profitable over time, you will make money. You just got to keep taking the shots. So when I say you don't need to predict to make money, you need to understand that you're going to have losses and you're going to have winners. And the key is your strategy profitable over time, right? Reward to risk ratio. I can be wrong. Honestly, I can be wrong 7 times out of 10. Well, obviously, I didn't predict very good. I was wrong 7 out of 10, but those 3 winners are so big, 3, 4, 5 times my losses, I make money. So we don't have to predict every trade, to be right. And again, a lot of new traders struggle with this. They want to be right on every trade. You don't need to be right on every trade. You just need to have a strategy that produces at least a 2-to-1 reward risk ratio, which again, like all the strategies that I teach my students in the course that I have, they all have a profitable reward to risk ratio. So just do me a favor, guys. Don't try to predict. Find a strategy with an edge and then trade that strategy consistently over time. That's how you make money. All right, number 3, wins and losses are randomly distributed. All right, this is a belief that you must accept. Right, wins and losses, again, you're going to either win or you're going to lose. You cannot stop that. You're going to put on some trades, you're going to have some winners and losers. It's random, right? When I enter a squeeze, okay, all I can do is look at the chart and try to put the probabilities in my favor based on the chart, right? Are the moving averages stacked? What's going on the bigger time frame? And then I can enter into the squeeze. Well, guess what? It's either going to win or lose, right? Just because the trend's up doesn't mean it's got to fire that way. Lots of times what actually happens is it fires against us, stops everybody out, and then reverses right back up. Okay? But you as a trader, the belief that, hey, listen, anything can happen at any moment and any time. Wins, losses, they're randomly distributed. 50-50, right? One of my mentors, Tom Salznoff, always said, hey, trading is a zero-sum game, right? It's just take shots, take shots, take shots. You're 50-50 if you're lucky. And again, if you're buying calls and puts, it's probably even a lot less than that. But I want to point out this belief. Wins and losses, they're random. They're random. Goes back to what I said a minute ago. It's not about how many times you win or lose. What is important in the game of trading is how small are your losses, how big are your winners. If your winners and losses are randomly distributed, how do you make money? That's what I just said. How big are your winners and how small are your losers? Because if I was 50-50, but my losses were small and my winners were big, I'm going to be profitable. So you've got to accept this belief. And again, some of these sound obvious on the surface. I just want you to write these down, stick them on your wall, stick them on your refrigerator, stick them by your screen, whatever. And I want you to just go over these beliefs over and over again. And when you start to lose, take a step back and start to look at those beliefs and see if you're out of line. All right, number 4, your strategy simply indicates one outcome has a slightly higher probability than another. Okay, that's it, right? We talked about expectancy, having a profitable or a profitable expectancy for your trading strategy. But your strategy simply indicates that one outcome has a higher probability than another. If you do this, when the market does this, your probability is this, right? If I trade squeeze trades, bullish squeeze trades, when the market is at support in an uptrend, then my probability is slightly higher than if I trade bullish squeeze trades when the market is in a downtrend at resistance. Let that sink in, okay? Because your strategy will just simply indicate a slightly higher probability if this happens and this happens. And that's why I'm always constantly teaching my students that we're taking all these variables and we're putting them in the pot, we're analyzing them, and we're making the best decision. We're trading the right strategy at the right time. Too many traders, especially traders that trade the squeeze, which I love, by the way, they have no idea what's going on in the market. They think they do. They're like, oh, the market's uptrending. That's not good enough. Where's the market at in relationship to support and resistance? If you just take this one thing and start trading your squeeze trades when the market is at support, only take uptrending squeeze trades when the market's at support, that already is going to explode your trading. And vice versa. Your strategy to the downside, if you trade squeeze trades to the downside, only take squeeze trades to the downside when the market is in a downtrend and at resistance. That one step alone will be huge. Or have some type of posture permission tool, right? That when your permission is yes, you do this. When it's no, you don't. Okay? So number 4, your strategy simply indicates that one outcome has a slightly higher probability than other. Okay, and your strategy, you guys know from the 7 components to a well-written trading plan, needs to have a strategy goal. That's the most important thing, right? One of the strategy goals in my trading systems are to trade uptrending stocks as they pull back into support. Simple as that. But anyway, I want you to remember that, okay? That belief that simply means, in this case, the strategy has one higher probability and outcome than the other, okay? That's belief number 4. Don't brush over these. They're very important. Number 5, every moment in the market is unique. Okay, so it goes back to what I said earlier. The markets are dynamic. They're constantly changing. What works today may not work tomorrow. What works tomorrow may not work the next day. Every moment is unique. And this is one of the things, too, and I got this when I read the book by Mark Douglas, Trading in the Zone. You know, he said something in that book that was very important. He said that, again, history does repeat itself because traders do the same thing. But every day there's new traders entering into the market. And those new traders are trading differently than previous traders. So just because a pattern worked in the past, it doesn't mean the pattern's going to work today. And the reason why is there's new traders coming into the market every day trading differently. So every moment is unique. Do not rely on one specific approach. Don't, okay? And again, let's go back to the squeeze. Don't rely simply on uptrending stocks, stacked moving averages, pulling back into the buy zone. Don't rely on that. Okay, that might have worked a while back, but it may not work that good today. And for those of you that trade the squeeze, you know what I'm talking about. Okay, you know exactly what I'm talking about, but every moment is unique. The markets are dynamic. They change every day. New traders enter the market, so you've got to adapt. You've got to constantly increase your knowledge bank. Traders are asking me all the time, Jeff, why do you still have mentors? Why do you still pay for education? Because the markets are changing every day. I have to, just like you, constantly improve my skills to be up to date. Okay? I constantly have to do it. Because I also understand that since the markets are changing every day, I need to change or adapt or die. This is a belief, guys, that you need to pay attention to. I cannot stress it enough. All right, trading is not gambling. Now, new traders come up to me all the time. They're like, trading is just gambling. Well, no, it's not. And the reason why trading is not gambling is because of the probabilities and risk control. I like to talk about that game Texas Hold'em. I don't know if you guys play Texas Hold'em, but they play based on probabilities, right? I got 2 aces in my hand. My probability of winning is this. Here's why this is gambling to a degree. If I have 2 aces and my probability is 98% that I'm going to win, because I have 2 aces, pocket aces, a trader can have 2, 3, which are low probabilities, and go all in. If I want to, I guess in this case, compete with him, I have to go all in. So the moment I go all in now, even though I have the probabilities, I can still lose at any moment. And that can wipe me out, right? That's gambling. Because that one move, if they go all in, I have to go all in, which means, boom, I can't risk control. I lose that one hand, I'm done. Trading is not gambling because our ability to risk control. If I want to lose $100 on a trade, I can set up that trade to lose $100. That's it, right? So it's not like the market's going to make me put up more money to see if I'm right. That is a huge difference. And this is what I tell traders, new traders, all the time, because they always think it's gambling. No, it's about risk control. It's having a high probability setup that matches the dynamic market condition, and then your ability to position size and control your risk. And then again, if you have a well-written trading plan, you're going to have stop adjustment rules along the way. You're going to know where to get out. Huge thing. Trading is not gambling. It's probabilities with risk control. Remember that. And a lot of strategies and setups that people trade, they fail because they are not controlling risk. Again, they are letting the mark, they're not really going in there thinking they can lose. They're like, I'm going to win. I got to be right. I've been right at everything in my life. It doesn't work like that. It doesn't work like that. And you know what I'm talking about if you guys have been trading the market. So do me a favor. Understand this belief. Trading is not gambling. Okay? You need to have a mentor, whoever that might be, to help you along the way, to be there for you when you need them. It's very important. Number 7, I don't need an Ivy League education to be successful at trading. That's a belief that you must accept. I have a lot of people come up to me, they're like, hey, I don't have any financial background. I don't have a license. I'm like, you don't need a financial background. You don't need a license. Now, I had my license for 25 years, but there are many traders who are multi-millionaires, very successful traders that they never even graduated high school. Or they graduated high school, they didn't even go to college. So this belief that you need an Ivy League education, you need to be so smart, it ain't about that at all. All you need to do is have a well-written trading plan, and have the discipline and the focus to stick to that plan and understand these 7 beliefs, which are really the trading Bible of beliefs. Okay, so you do not need an Ivy League education. I don't care if you have no financial background. You don't need it. It's very important. And again, I know a lot of you traders that have been in the game for a long time understand that. Okay? But a lot of traders don't, because I get this question all the time. These beliefs are wrapped around the questions that I get on a daily basis from students, from potential students, and I mean, just, you can see them all over the place. Go to Twitter, right? You see them everywhere. So guys, you don't need an Ivy League education. So fact, this can be all summed up by this simple advice. Develop a system, test that system, and if that system is profitable, stick through that system through the ups and the downs. That's the best advice, and if you're still watching this video, please write that down. Develop a system, test that system, and if that system's profitable, you stick with it. Stop switching systems week by week by week. Okay? If you do this, and you also accept those 7 beliefs that we talked about today, I mean completely, you're going to find out that trading is a lot less stress than it needs to be. Okay, quick recap really quick, guys. 7 important beliefs to accept and improve your trading. Anything can happen. You don't need to predict to make money. Hey, wins and losses are randomly distributed. Your strategy simply indicates one outcome has a slightly higher probability than another one. Every moment in the market is unique. Trading is not gambling. And I don't need an Ivy League education to be successful at trading. All right, everybody. I hope you stuck with me and watched that entire video to the end, like right now. And I hope you understand how important those 7 beliefs are. You may not know it, but those 7 beliefs are the key to your success in living, or trading at least, a nice, stress-free trader life, right? Which is what I'm assuming we all want. And if you're interested in any of the other things that I offer, check down below with the different indicators that I offer and who I'm affiliated with and what you get if you use one of my links to